Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, bringing you our own take on the great crypto treasury race, corporate America's boldest bet yet. This is mostly focusing on the US, but we know crypto treasury race is across the globe. Imagine this: boardrooms once filled with talk of quarterly margins and ERP systems are now buzzing about block confirmations, wallet security, and hash rate volatility. In the wake of Bitcoin's institutional legitimization and Ethereum's staking revolution, a new kind of gold rush is erupted, not in Silicon Valley's garage or Wall Street's trading pits, but deep within the treasuries of public companies and private upstarts alike. What began as a bold experiment by MicroStrategy, now called Strategy, is now spiraled into a high-stakes, high-volatility arms race, a game of corporate poker where companies are staking Bitcoin, Ethereum, and a select altcoins like chips on a casino table, betting not just on price action, but on the future of money itself. From mining firms doubling down on self-minted digital reserves to media companies raising convertible debt to chase crypto glory, America is undergoing a silent financial transformation, one not governed by the Fed, but the mempool and the halving cycle. The question isn't just who is buying. The real question is, what happens when too many chips are in the pot and the dealer flips a bearish card? That's what we want to explore in this video, guys. But before I proceed, this is not financial advice. These are just my own opinions when it comes to the great crypto treasury race that is happening across the globe. But in this video, we'll most likely focus on the American treasury race when it comes to crypto. Please do your own research. This is not financial advice. Seek someone who is actually trained to give you financial advice. This content is also not targeting UK audiences for obvious reasons. The UK authorities do deem anything crypto related, including this video, of course, to be extremely risky, and they are trying to protect you from losing your investments and your funds. That said, let's come back to what I think are the 10 most aggressive players within the crypto treasury revolution and the cliff edges they now walk. This is not an exhaustive list, and it might turn out not be the top 10 even in the US, but let's give it a try. We're going to start with Strategy, formerly MicroStrategy. They've amassed Bitcoin close to, if it's not over 600,000 already, but it's close to 600,000, and at current prices you're probably talking of well over $70 billion. And their method they've been using for accumulating their Bitcoin treasuries, aggressive debt and equity offerings to fund relentless Bitcoin accumulation. But there are risks involved in it. Their strategy is prone to mega volatility and margin vulnerability. Some analysts are warning that they are essentially a leveraged Bitcoin ETF. What do you think? Let us know in the comment section. Let's move on to Bitmine, Immersion Technologies, and they've accumulated some Ethereum. I think they are now well over 100,000 Ethereum, probably going well over 200,000 as well. And they're backed by heavyweights like Peter Thiel and Tom Lee. And their strategy is that of accumulating Bitcoin and Ethereum reserves, plus mining Bitcoin, of course, institutional grade risks with high upside. Moving on to Bitfufu. They've also been accumulating Bitcoin or mined Bitcoin and that they held instead of selling. And their approach seems to be that of self-mining and holding Bitcoin as a long-term asset. And that's their strategy. No leverage, just mining yield. Next, you got K-Wave Media. And they've also been jumping onto the Bitcoin treasury model, and they've pivoted from entertainment to crypto. They do have a regional ambition with speculative risk. Next, you got some emerging players in Figma, Cypher Mining, Metaplanet, RemX Points, and KULR, all active with Bitcoin buys. You got the Trump Media and Technology Group, DJT, also jumping into Bitcoin, part of their reserves, and their tactics include IPO dilution and convertible debt to fuel Bitcoin stash. High drama, high risk. Then you got World Liberty Financial. It is also Trump-backed, or actually owned by Trump, and their ambition is to fundraise a lot of money to buy Bitcoin. I think so far it's well over 1.5 billion into their treasury. I don't know whether it's just Bitcoin or it also includes some altcoin. And risks around World Liberty Financial include moves beyond BTC and ETH, relying on speculative, less liquid tokens, which is a volatile territory. Talking of the Trump meme coin, and probably the Melania meme coin will probably be part of their treasury, and those are extremely risky. Next, you've got Ethereum-focused treasuries, and the leaders are Bitmine, Chainlink, Coinbase. Together they hold between 4 and 5% of its supply. Well, how about to guess that? And their reasoning, they're looking at staking income, DeFi integration, and institutional appetite that is growing. But what could go wrong with these institutions when it comes to this crypto treasury race? Well, let's look at massive volatility hazard. Companies like Strategy literally bet their balance sheets on crypto swings. A drop from 123,000 to approximately 70,000 could trigger margin call. That's quite possible, because I think that 70k is around MicroStrategy's buy price. So if they are leveraged, there could be margin calls which will force them into selling Bitcoin, which then exacerbates base the drop in price from 70k maybe to half that. But that's just me speculating here. Next, you got liquidity crunches. Small players or token-heavy portfolios, for example, World Liberty Finance, face extreme flash crashes if sentiment shifts. Credit market skepticism as all companies using debt to fund their treasuries risk downgrades and increased capital costs. The likes of Mike Novogratz wants the treasury gold rush may be peaking because there is saturation within that sector. And we also have public perception risks. Some executives sold stock post-announcement, raising concerns of publicity-driven pump and dump behavior. Let's move on to some of the strategies employed by some of these players, the sector they are in. Let's start with Strategy, which has been operating as a software business. And their strategy is debt and equity-funded Bitcoin accumulation. Next, you got Bitmine, which has been mining Bitcoin and I believe other cryptos. And this strategy is that of accumulating Bitcoin and Ethereum, plus it also has institutional backing. Bitfufu, mining services, self-mined Bitcoin holding strategy. K-Wave Media, it is within the entertainment sector. Large securities-based BTC buy plan. Figma, Cypher, and Metaplanet, technological companies, mining companies. Modest BTC accusations for treasury. Trump Media and social, heavily leveraged Bitcoin reserves. World Liberty Financial, the finance and crypto, and their strategy centers around token model investment into crypto firms and Ethereum treasuries. And this one, the sector is diverse corporates, ETH holdings for staking the DeFi exposure. So with corporate treasuries now hopping onto crypto like teens chasing the latest barrel trend, except this trend can wipe out balance sheets from Strategy's engine-fueled Bitcoin rocket to Trump Media's high-stakes crypto rodeo. Many are loading assets with borrowed fuel. So what's the real risk here? Well, a market correction could transform these pride-fueled portfolios into cautionary tales overnight. But the bottom line is, corporate crypto treasuries feel like a high-speed chase, exciting headline grabbing, and one wrong turn away from disaster. Do you think it's the same? That is, this is one wrong turn away from disaster? Let us know in the comment section, guys. Until the next one, FD for SageFab.tv signing out for now. Bye.